Good afternoon. Today is Thursday, August the 3rd. The time right now in Singapore is 1:21 in the afternoon, and overnight we have a bit of a sell-off in US equity markets. In fact, global equity actually went down on the news that the Fitch rating agency has actually downgraded US credit rating from AAA to AA+. So this is the market reaction. The last time the market had something similar was back in August of 2011, where the market actually tumbled. So are we going to see the same thing this time around? Maybe not so much, at least not for now. Let's see. In the Dow Jones itself, we have no more new highs traded. Understandably, for yesterday, the high remains at 35,679.13, and overnight you can see the prices are still coming off. And in the 4 hours time frame, this is where the market get very interesting. Now, what we are seeing here is the cash index, but I think when I show you the futures contract, that will be a little bit more illuminating. Now, this is the micro E-mini Dow itself. You can see the market has pulled back in a very neat three-wave. There's no panic. There is no wholesale selling. I think the market is very well controlled. In fact, I think that market, if it ever goes down even a little bit more, perhaps to 35,200 to 35,300, it could actually bounce. So this is my take right now. I don't think the market is going to sell off immediately. I think the market will actually bounce back up ahead of the non-farm payroll, which is going to be due tomorrow. So if there's going to be any kind of a move down, I think most likely it will either be post the non-farm payroll or early next week. So right now, I think the market is ready for a bounce before it comes back down and challenge a new low. I think the target is somewhere probably around 34,500 levels, and let's watch out for this eventuality. Over in the S&P 500, in the cash index, we also see a bit of a pullback, but again, there is no panic selling. Now, this is the micro E-mini S&P 500. We also see there's a very neat three-wave down, and the market has actually hit my target within the range of 4,522 to 4,541 and a quarter. So you can see that the price is actually testing this pivot point, which was last traded on June 17 at 4,527 and three quarters. So I do expect a bit of a bounce going into tonight's trading ahead of the non-farm payroll. So eventually I would like to see the price comes back down a little bit lower to the 4,411 target here. Okay, but immediately I think we should be expecting a bounce. Now, over in the Nasdaq 100, this is the cash index. We see a very neat pullback, and in the futures contract, the micro E-mini Nasdaq 100, we also see a very neat three-wave pullback. However, it has not hit in my target range yet. Possibly the market may actually go down a little bit more this in tonight's trading, hopefully to around 15,200 to 15,300 levels before the market bounce. And eventually I do expect the market to test out this level here at 14,855, which is this level here last seen on June 26. So this is my take for now. In Asia, we can see that the Hang Seng Index continued to edge lower yesterday. We can see that the market actually hit a bottom somewhere around 19,350 in the futures contract. This morning we have a bit of a bounce, about 300 points bounce to 19,525, and but I think the market has a little bit more room to the downside. Eventually I think the market will have some more room to go before it actually stabilizes. I'm thinking somewhere around the 18,000 levels. So let's see what happens. In the Shanghai Composite, we have a pullback, but this pullback has managed to hold out at a pivot point here at 3,248, and let's see what happens beyond this. But I think the market is getting ready for a new pattern to develop. So let's see what kind of new pattern it can actually evolve into. Now, in the Nikkei 225, this market remains very, very negative for now. I think the market eventually is going to go all the way down to 31,760, perhaps even to as low as 30,700 levels. But my immediate target is somewhere around 31,200. So let's see if the market will extend lower. It does look like it may be the case here. And over in the dollar itself, you can see dollar index as far as the futures is concerned, dollar remains very well beat. And of course, the knee-jerk reaction for those who are thinking why the dollar managed to rise on the back of a downgrade in the US credit rating, I think the market right now is having a knee-jerk reaction to go and look for something safe to park their money, because they are exiting out of the equity markets and they have to find somewhere to park their money. And I think they feel that the money is probably safer in dollars, and this is a knee-jerk reaction. So we can see that the dollar index managed to trade a bit higher this morning to 102 58 thereabout, and this is within my bracket of prices, which I think it has a little bit of a leeway, but I think the top side could be around 103.30 levels, but I think eventually the market will have to pull back. But right now the market is remaining very, very firm. And over in the euro, we can see because the dollar has been so firm, the principal currency has all retraced, and the euro dollar is no difference. It's traded to a low of 109.18 overnight, and the market may actually drift a little bit lower to test 108.35 levels to 108.95 levels. So we have a bit of a drop going forward. I think somewhere around 108.44 is where the market may actually find some kind of support. Okay, and in the sterling itself, we also see wholesale selling in the sterling, and sterling went up to an overnight low of 126.80, and it does look like there may be a little bit more room to the downside, probably somewhere around 126 to 126.75. Again, there's a pivot point here at 125.90, so let's watch how market reacts as the market goes towards the 125.90. In the Aussie market, the market has extended a bit lower, so I have actually extended my target a little bit further for the market to go and test this level, which last seen in January the 1st, this level of 06460 levels. So I think that the market has a little bit more room to go, perhaps another 60 pips or 70 pips more to go before it actually stabilizes. Okay, dollar yen remains very well bid. This is a bit of a disappointment because I was hoping that the dollar yen can actually turn around. Right now the market is at 143.85 levels, and it does look like it is within this bracket of prices that still make it very vulnerable, and this level is 143.40 to 145.10 levels. So if the market does not manage to take out the 145, that means the market may actually come off. So do watch out for that eventuality. In dollar Canadian, we see the market actually stabilize and actually went beyond my expected target. Now the market is gunning for even much higher levels, to perhaps gunning for 133.85 levels. So this is very, very near the an area of vulnerability as we are speaking. 133.64 to 133.90 could be an area of vulnerability, but I do expect the dollar Canadian to actually meet some resistance here. Now there is a little bit of fundamental shift in the dollar sentiments going from July to August. August has seen dollar strength so far. We're only in the third day of trading in August, but we are already seeing perhaps a reversal in the dollar sentiments. So do watch that as we go into further into August. So, and if the dollar is going to be strong, obviously it will impact commodity prices. We are seeing crude oil prices has make a dip. This is no surprise. I have been calling for a dip. Market high is $82.43, traded to a low of $79.05. And if we do get a bounce back to $80.74 to $81.15, we could see the eventual move towards the $73.85 level. So this is, at least for the time being, a little bit bearish for commodities, in particularly crude oil. And of course, we are also talking about gold as well. Gold has also came off last night to as low as $1,932.70, and this is another area in which it may find some kind of support. And if the market can hold out at $1,929 to $1,940, I think it should be able to bounce. But let's watch, because the dollar is getting strong, and if the dollar is strong, it is a negative for precious metal prices, including gold and silver. Silver is also pulling back as we are speaking. This morning we have a low at $23.58, and this is also within my bracket of prices, which saw this market pull back in a three-wave decline from $25.27, and the market right now is within this bracket of prices, which may actually find some support. This level is $23.33 to $23.62. So again, let's watch out for eventualities here. And in the Bitcoin here, we can see Bitcoin had actually do a reversal. Yesterday's rally all the way to $30,122.80 has seen quite a deep pullback. So far, the market has pulled back almost 80% to as low as $29,005. Okay, so right now, the market should be able to hold around here, and for the market to maintain its somewhat bullish outlook, I'm still very, very positive on Bitcoin here, and this is an area of opportunity in my opinion. Anywhere between $29,000 to $29,235, I think that is the area that will give us a a very good odds for the market to resume its rally from the low of $28,700. That's all I have for you for today. In the meantime, you take care, and do remember tomorrow is the big one, the non-farm payroll. Bye bye. Take care.